Well, so glad you could join us here on a Monday. I'm Marlin Bohling with you as the markets are open, and we're going to kind of get a sense of the direction they want to go here early this week. And I want to welcome Chris Swift aboard. He's with Swift Trading, based here in Nashville. And he joins us right now. So, Chris, let's go ahead and take a peek at what the markets are doing up to the moment here with our quotes provided by Bar Chart. On the corn, we currently have corn still on the lower side. March down a penny and a quarter at 4.22 and a quarter, but it's not moving very far from unchanged. Still just kind of weak in the knees here. On the soybean trade, the January contract is 2.5 cents higher at 11.63, just a penny from its low of the day. It's a full dime off of its overnight high. March now up 2.5 cents. Let's move to the wheat, and in the wheat market right now in Chicago, you have the March contract trading 15.5 cents lower at 5.99, a full penny below that $6 benchmark. That could be very significant. Meanwhile, in Kansas City, March is down 15.25 at 5.66 per bushel. That's 22 cents off its overnight high. Spring wheat in Minneapolis has March down 11.25 at 5.58 3/4. That would be about 15 cents off of its overnight high. What is cotton doing this morning? We have the March contract 51 points higher at 74.59. Boy, look at it go. For a while, it was over 75 cents. So let's talk about all this. And Chris, your take, first of all, on the corn market this morning. How much corn is moving these days? Have you heard?
You know, there's still quite a bit. Our exports have been very good. Probably the corn and bean softness this morning, even though beans are plus on the day, like you said, they've lost about 8 or 9 cents off their highs. They got some moisture in South America, but probably not enough to start a downward trend in either of these. So I think we're just kind of marking time in the corn and beans right now till either A, our next export movement, or we see further planting through South America.
So what's the latest you have heard on that strike going on in Argentina? That was supposed to be a one-day affair, and from what I can gather over the weekend, it's still in effect.
Yeah, and I haven't heard a lot about it. I'm not real sure how that's going to impact, because we know that they don't have a lot of product to export right now. So I'm not real sure how it's going to impact it going further.
So it could be just window dressing, maybe. We're getting close to the end of the year. A lot of folks putting into effect their year-end tax planning, sales or purchases, whatever. And just wondered how that's impacting folks that maybe have a little bit of grain left to sell, but they're not sure when to pull the trigger. How do you feel about that right now after the recent pullback from recent highs on corn and beans?
Well, I think a lot of the grain had already been marketed. In August and September, we saw a tremendous amount of forward contracting sales, so I don't think there will be much from that. When we look at the wheat market this morning, that looks more like the Russian export tax. Russia has got a lower wheat crop now, and they're starting to do things in order to try to reduce the price at home for their wheat. So they're going to throw an export tax on it, I think, starting about mid-February. So we might actually, although it's a little bit negative right off the front end of it, it's a fairly bullish scenario where they're already starting to have to increase the taxes for export in order to bring that price down at home.
You know, for a while, wheat was kind of tied to corn because of its competition as a feed ingredient. Is that not the case anymore?
No, I think the price of wheat's jumped up enough now. We're trading just about above $6 on any kind of wheat purchases on there. So no, I don't think that's quite just yet. And you would probably have to see corn up another 60, 70 cents before wheat feeding would come back in as profitable.
All right, we'll come back and take a look at cattle and hogs in just a moment. We're talking with Chris Swift. We'll be right back. Let's go ahead and open up our live cattle trade once again and see what it's doing right now. So on the big board, we have the February contract 47 lower at 112.77. Just like it did on the opening bell, we have everything just kind of mixed up. April down 27 right now at 117.10 per hundredweight. However, you have June and August a little bit higher. August is actually up 25 cents at the moment. Now in the feeder cattle trade, with these quotes provided by Bar Chart here, we have March trading 12 cents higher at 140.67, while that nearby January contract is actually down 20 cents. It's at 139.52. So narrowly mixed on the feeder cattle market here, just kind of all jumbled up. On the lean hog market, so far today, we have the nearby December up 17 cents, but the big mover would be your February. It's up $1.70 at 64.92, And it's only a nickel from our high of the day. And Chris, that would seem to kind of negate the downward action that we saw on Friday heading into the weekend there.
It is. Chris and I were talking about it earlier this morning, how quickly they can retrace some of those steps that the hog market has been taking off. And we keep hearing that the hog production is not going to be near as low as what some of the quarterly hog production numbers had shown. So it is kind of interesting watching the futures market dance around here like this.
Let's look at the livestock summary from Friday, and just wanted to touch on what the cash markets were doing around the country. When it comes to the cash cattle trade out in the plains, the market seemed to be hovering around 106. And that would be, what, a couple of bucks under what we had the week before at least. You were telling me during the break you were hearing of a fairly wide range last week in the cash cattle trade.
Yeah, they've been as high as 108 and as low as 105 that we heard, and not a lot of numbers traded hands. We do note that they traded a lot of feeder cattle and calves last week too. So a lot of that movement, and there's several different fundamentals going around right now with the drought areas that we have in the Midwest there, and I don't think they got near as much rain as what is probably needed to help some of that. And we know that we got the end of the year coming up, and we know that probably going forward we're going to have fewer cattle to deal with for the next 24 to 36 months just because of previous birth rates that we've seen in the past.
On the cash live hogs last Friday, we really had nothing to compare it to the day before, not enough numbers. Carcass basis hogs on Friday were said to be down 80 cents and priced at $53.44 per hundredweight. Chris, thank you for all the information. I appreciate it. Chris Swift of Swift Trading in Nashville joining us this morning. Janet, back to you.
All right, as